Bismillahirrahmanirrahim. Assalamu alaikum. This is Saira Zaman Khan. In our last video, we started May-June 2020 paper 1. We attempted MCQ
Thank you
1
so
till
very much.
9.
Hope everybody finds
Today,
this
we will
useful.
continue the same
Please
paper
remember me
and
and my
resume
loved ones
from
in your
MCQ
prayers.
number
Stay
10.
blessed.
Number 10 says, Sita discovers that $1,000 received from the sale of fixtures had been entered in the sales account. Which journal entry corrected this error? Now, when Sita received this 1,000, the double entry should have been bank debit and disposal of fixture credit. Instead, she debited bank and credited sales. As a correction, we need to remove it from the sales account and enter it in disposal account. So the correct entry should be, in order to remove sales, sales should be debited, and in order to record disposal amount in disposal account should be credited. So the correct option is option C. Sales debited and disposal of fixture credited. Number 11 is the total of a trial balance did not agree and 200 was debited to a suspense account. Now remember, if we are debiting something to a suspense account, it means there is a shortage on debit side. So either something is missing from debit side or something extra has been recorded on the credit side. Remember this basic point. On checking the book, it was found that two errors had been made. First error, a sales invoice for $700 had been recorded in sales journal as 770. This is error of original entry, which does not affect suspense account. It does not affect trial balance, so it does not involve suspense account. Number two, the sales journal had been totaled incorrectly. What was the error made in totaling the sales journal? Now, as we have already discussed two basic elements, error number one does not affect trial balance. And here, because suspense account has debit balance, so it means that something is either missing from the debit side or something is extra on the credit side. Since the total of sales journal is taken to sales account, and we have already determined that there is something extra on the credit side. Extra on the credit side means that sales were actually overcast. Because you know that we record sales with a credit entry, and since this suspense account 200 debit is showing the extra thing on the credit side, so it means that sales were actually overcast by 200, which is present in option B. Number 12. The income statement of a business showed a loss for the year of 16,000. Remember, it's loss. On checking the books, the following errors were discovered. 1. No adjustment had been made for insurance prepaid 480 and no entry had been made for bank charges 620. What was the correct loss for the year? To attempt such an MCQ, my strongest recommendation is not to do it on calculator. Rather, show your working and then reach to the answer. Like here, I have drawn this table. Of course, in order to explain you properly, this is done quite neatly. In examination, you are not expected to spend so much time on this, but you still have to do working in your own way. Now here, the first error is that prepaid expense was not recorded. Now remember, a prepaid expense belongs to the following year and it does not increase the expense of this year. It has got nothing to do with the expense of this year. As you have included it in the expenses of this year, you need to remove it. So when you remove it as a correction, your expenses will decrease. As your expenses are decreasing, your profit will increase. Now here, as our profit is negative because it's loss. So 16,000 here in bracket and plus prepaid expense of 480 because we are increasing profit. So minus 16,000 and plus 480 will give us minus 15,520. So after this correction, it's still loss of 15,520. Looking at the second error, bank charges were not recorded. Now, bank charges is an expense. Since you are, as a correction, recording it now, so you will increase your expenses. As you increase your expenses, your profit will decrease. So, minus 620. So, minus 15,520 and minus 620. When these two are added, you know mathematical rule, minus minus plus, so you get 16,140 is still a negative figure, which shows that it's loss of 16,140. So the correct answer for number 12 is 16,140, option C. Number 13. What would result in a cash book balance being lower than the balance showing on a bank statement? Now, since cash book and bank statement both are reflecting the same thing, that is your bank balance. If there is some difference, there are some reasons, right? Considering this situation where cash book is showing less balance, less amount than bank statement, it means that there is some receipt which has been recorded by the bank but is missing from cash book. Looking at the option A, a check received from a customer was not recorded in the bank statement. In that scenario, the money has already been recorded in cash book, so cash book balance will be higher than bank statement. A is not the answer. B. A customer's check dishonored by the bank appeared only on the bank statement. So, dishonored check, it means we have not received money, but the bank statement has recorded that. So, bank statement will show less balance than cash book. Again, this is not the answer. C. Payment by a customer directly into the bank was not recorded in the cash book. So this money has been recorded and is being shown on bank statement but is missing from cash book. So of course cash book balance will be lower than the balance being shown on bank statement considering this one. So C is so far the correct answer. Let's evaluate D also. Payment of insurance by standing order was not recorded in the cash book. So there is a payment which we have not recorded in the cash book. So cash book is still showing more balance than bank statement considering option D. So option C is our correct answer. Due to this, cash book will show less balance than bank statement. Number 14 is Thambi is preparing her sales ledger control account. She needs to know the total for goods which have been returned by credit customer. So here we are talking about sales returns and the amount owed by credit customers which have been written off as irrecoverable. So bad debt. Where can she obtain this information? Please remember, for control accounts, the main source of information is always the books of prime entry and not the D accounts. So, for sales returns, we will have sales return journal, and for bad debts, we will have general journal. Once again, remember it's books of prime entry which we are going to use and not accounts. So it's present in option D, sales return journal for goods return and for irrecoverable debts, general journal. You can just see that in option A, it's accounts, so that's not correct. In option B, purchases journal, returns journal, right? It's not about purchases return journal. C is again about accounts, and only option D has the correct books of prime entry, sales journal for goods return, and general journal for irrecoverable debts. Number 15 is the following payments were made when a new machine was purchased. Here we are given four types of costs and how much was the capital expenditure. Now, Look at the first one. Cost of the machine, 32,000. Cost of the machine is part of capital expenditure, so 32,000 will be included. Charge for delivering the machine. Carriage cost on non-current asset is also part of capital expenditure, so 1,800 will be added to 32,000. Insurance of the machine. Remember, insurance is your revenue expenditure. So this 2,000 should not be considered. Wages of employees installing the machine. Installation cost is part of capital expenditure because unless you have installed the machine, you cannot start using it. So we have got three capital expenditures, 32,000 plus 1,800 plus 1,300. So the correct answer is 35,100. Option C. Number 16 is a non-current asset was depreciated at the end of first year of ownership using the straight line method based on the following information. So cost is 20,000, working life is 4 years and residual value is 4,000. It was then found that the reducing balance method at 30% per annum should have been used. What was the effect on the profit for the year of correcting this error? So this involves both thing, depreciation calculation as well as correction. And please always focus on the wording. What is actually asked, whether they have asked you profit before correction, that is profit with the error, or they have asked you the effect on profit after you have corrected the error. So again, such a question must be done with the help of calculation. And you have to show your working so that you can reach to the correct answer. Of course, here I have done it very neatly, but you can just do it in your own way. So first we calculate depreciation using a straight line method. So cost minus residual value divided by life. So we get 4,000 as our annual depreciation. Whereas if we use reducing balance method, 30% on the original cost, 20,000. So our annual depreciation will be 6,000. So we are using straight line method, 4,000 expense, whereas using straight line or using reducing balance method, it's leading to 6,000 as annual depreciation. So our expense is increasing by 2,000 as reducing balance method should have been used. So we are correcting it and we are increasing our annual depreciation from 4,000, we are taking it to 6,000. So it needs increase of 2,000. As we are increasing our expenses by 2,000, of course, our profit will decrease. So 2,000 decrease in profit. Correct option is option A, decrease by 2,000. Number 17 is Elizabeth purchased a motor vehicle costing 8,000 on 1st January 2018. It is depreciated at 40% on the reducing balance basis. Which journal entry records the depreciation for the year ended 31st December 2019? Two important elements. First of all, what is the double entry to record annual depreciation? The double entry to record annual depreciation is income statement is debited and provision for depreciation is credited. Second, you are asked to give the entry for the year ended 31st December 2019. And this is the point which majority of the student miss in this particular question. Remember that the asset was bought on 1st January 2018. So when we are talking about 31st December 2019 year end, so far the asset has been depreciated for 2 years. So don't consider it as the first year, right? First we will calculate depreciation expense for the year ended December 31st, 2018 and then for 2019. Again, we will do it with the help of working. So the first year. which is ending on 31st December 2018. Reducing balance method, so rate into cost in the first year. So 40% of original cost, 3200 is our annual depreciation. Net book value 8000 minus 3200, we get 4800. In reducing balance method, rate is applied on opening net book value. So opening net book value for the year 2019 is 4,800. So when we calculate depreciation for the year ended 2019, it's 40% of 4,800, which is 1,920. So this is our annual depreciation for the year 2019. So double entry for this should be income statement debit 1,920 and provision for depreciation credit with the same, that is 1,920. So this is present in option A. Income statement debit 1,920 and provision for depreciation of motor vehicle credit with 1,920. Number 18 is Alice financial year ends on 31st December. The balances on her books on 1st January 2020 included the following. So these are the balances. Commission receivable, which is an income, 250 debit, and rent receivable, 500 credit. What do these balances represent? Now, commission receivable is an income. Please remember, for income, an accrued income is the business asset because people should have paid it, but they did not. So it's actually the business current asset. Debit 250 means that it's a current asset, right? So it's accrued income. So commission receivable is accrued income here. Whereas if people have paid to the business in advance, so it's a liability on business, means that it's a credit balance. Rent receivable is an income, and here is showing 500 credit. It means that it's a liability. We have just discussed that an income will be a liability only if people have paid this in advance to the business. So here, commission receivable is accrued, outstanding, and rent receivable is paid in advance. Let's see which option has these both. So option A has commission receivable as income outstanding, which is correct, but rent receivable is also income outstanding, which is wrong. Option B, commission receivable outstanding accrued, correct, and rent receivable is prepaid. This is also correct. So option B is the correct answer. For option C being incorrect, you can see that it's income prepaid, which is actually wrong. So option B is our correct answer. So here we have attempted MCQ number 10 till 18. The remaining MCQs inshallah we'll attempt in the next video. Please leave your feedback in comments. Thank you so very much. Hope everybody finds this useful. Please remember me and my loved ones in your prayers. Stay blessed.